let's imagine a scenario. A company has a milk truck, but they want to get a new one, so they're going to want to sell this one so they can make some money to buy the new one, right? So they're going to want to dispose of the milk truck that they already have. All right, and we're going to see how this affects the general journal account. So we have a story. All right, the cost of the milk truck is 500,000. The milk truck has a salvage value of 100,000. Depreciation is done by the straight line method with a useful life of 8 years for the milk truck, and is sold after 3 years and 6 months. So the first thing we're going to want to do is calculate our depreciation, okay, per year. And to find the depreciation, we're going to take the cost of the asset, which is 500,000, minus the salvage value, being 100,000, divide that by the useful life of the asset, and we then get 50,000 depreciation a year. So as I said, we're going to want to see how this affects the tier accounts, right? So the first tier account is our assets account, okay? And this here is going to be super simple. It's going to be our assets account, right? The asset account, super simple. We know that the cost of the asset when we purchased it was 500,000. So that was the balance at the time that we sold it, or just before we sold it, right? And excuse me, it's a little bit tight there, 500,000, right? Cool. But then we're going to sell it, right? So we know we're going to have to minus from this account. But where's that going to go into? It's going to go into this account called the disposal account. And that's probably the most important account in this whole section. And it's the disposal account. So we know that we're going to sell this asset, okay? We're going to sell the asset. So we no longer have this book value of 500,000. So we're going to sell the asset and it's going to go to our disposal account, right? And we know the cost of it was 500,000, right? So 500,000. So we know it's going to be the debit credit rule. So we know it's going to come over here where it's going to be asset and it's going to be 500,000, right? And we can close off then our asset account, right? So our asset account is now closed off. We've done the right thing. Then we also know that for this asset, there's another account. There is the accumulated depreciation account. Accumulated depreciation account. Okay? And we know that because it comes from our depreciation account, which is an expense, we have to debit the expense, meaning that it's credited here. So let me show you what I mean. So first you would have the balance. So it would be balance. And the balance we know was for 3 years, right? So 3 years, 50,000 times 3 would be 150,000. Now, in this year, we sold it 6 months halfway through the financial year. So that's only half the year. So there's going to be depreciation of about 25,000. So let me show you where this comes from and what I was saying about the debit and the credit, right? So if we looked at our debit account, okay, we would have the 150,000, and now we would have the new 25,000, okay? And we know that would contribute towards the carrying value of our asset, right? And so we know this here is going to the accumulated debt, right? Our debit credit rule, right? The double entry rule. So we know where that's coming from, okay? But now again, I want to have it go towards our asset disposal because we no longer have this asset. So we no longer need to account for accumulated depreciation on the asset, right? This depreciation is still going to be in your profit and loss statement, okay, as an expense for the year, but we are going to have to affect the accumulated depreciation by minusing it. So again, we go into your disposal account. And the disposal account, we know this would be 175,000, and we want 175,000 on both sides. So we're going to say 175,000. We're going to in the disposal. Now, in some cases, there will be more than one asset, so you would just do it for that specific asset. Okay, for instance, it's 175,000 for that asset. If the balance was more than that, the disposal account would still be 175,000. Right. So in our disposal, we know this is coming from the accumulated depreciation. So we've disposed of the asset. Now, as I said, we wanted to sell this asset. And so part of the story is that we sold it for, let's say, 300,000. Okay. Now, we want to know, did we make a profit or a loss on this asset? So if we looked at our cash account, all right, cash, we would have received 300,000. Okay. And that would have been part of the sale, right? But we know that the sale is part of the disposal. So we come here and we say cash, and we're going to say 300,000. Then in your disposal account, you want it to balance. So you want 150,000 on both sides at the bottom. And then there is going to be a difference, right? Because the total on the left-hand side is 500,000, but the total on the right-hand side is 475,000, right? Which we then say 500,000 minus that, and you get your difference, which is 25,000. And this goes to your profit and loss statement, okay? And that then is another account known as our profit and loss account, right? And that is going to, again, the debit credit rule is going to come over here, 25,000, which is a disposal, which is part of the disposal account, which is a loss on sale. Now, it might be hard to see with all the accounts that there is a loss, so I'm going to try to explain just logically why we got that loss. Okay, so we know that this asset had a cost of 500,000, right? And we know that we sold it for 300,000, right? So you might be saying, well, why wasn't there a 200,000 loss? Well, there was depreciation, as we said, of 175,000 for the whole life that we had the asset, okay? And that was the depreciation on the asset. So the carrying value, the CV, is equal to 500,000 minus then 175,000. So we can see the carrying value of this asset was 325,000. So if the carrying value was 325,000, but we sold it for 300,000, that's lower than our carrying value, right? So the loss is equal to 325,000 minus 300,000, which is equal to 25,000. And this, that's 250. And this would then go in your profit and loss statement, again, as an expense, as a loss on disposal. Okay, but we'll go more into detail in the income statement in later videos. I really hope this one helped you understand the whole asset disposal. Maybe try watch it once or twice if you didn't fully understand, and try do the example yourself. If you have any questions, please leave it in the comments down below. Have a happy, great day. It's Curated.